In this video, we are going to talk about SoFi Technologies and the recent sale of shares from their fourth largest shareholder. And that shareholder is the Qatar Investment Authority. So in this video, we will take a look at that sale of shares as well as some buys from insiders, and I'll give my opinion on all of this. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. In the last 6 months, SoFi's stock is down over 34%. However, keep in mind where the stock was trading at in December. It was trading over $10 per share, and we saw a big run up through the later half of 2023 where the stock went up almost 60% in the matter of a couple of months. And this big move up had to do a lot with optimism around where interest rates were going in 2024. A lot of investors were expecting the Fed to begin lowering interest rates around the middle of 2024. However, as the year has progressed, there's been a lot more pessimism around whether the Fed will actually lower interest rates in 2024. And this more recent pessimism has led to a sell-off of even some of the largest investors in SoFi. Earlier in June, the Qatar Investment Authority sold all of its 19.84 million shares of SoFi. On the 12th of June, the Qatar Investment Authority filed a Form 144 disclosing its intent to sell almost 20 million shares of SoFi. The very next day, the firm did just that. On June 13th, they sold all of their SoFi shares for a total of $134.51 million at an average share price of $6.78. Prior to the sale, they were the fourth largest shareholder of SoFi, only behind Vanguard, BlackRock, and Silver Lake. This isn't the first time that the Qatar Investment Authority has sold shares of SoFi. Back in November 2021, they sold 4.68 million shares at an average price of $21.60. Personally, I don't see this sale as being a big concern for long-term investors in SoFi. A lot of that has to do with the fact that they have held their position for about 5 years now. They originally invested back in May of 2019. They put in $500 million at a valuation of $4.3 billion for SoFi. And currently, SoFi's market cap is sitting at $6.91 billion. That means that they're up over 50% on this position. So when I think about that and a 50% gain on SoFi, they're probably looking to take some of those gains off the table and invest this capital somewhere else. The other reason why I don't think this is a big concern for SoFi investors is something that I've read, but I can't confirm if it is 100% true. I believe that the chief investment officer at QIA, the Qatar Investment Authority, Ahmed Al-Hamadi, is a board member at SoFi currently. However, he has lost his seat, and because of that, that could warrant the QIA actually selling out of their position in SoFi just because they don't have as much influence over the company as they used to have. And this is a common practice in the stock market. A lot of these larger funds will do this where they'll try and get onto the board. It's called activist investing, where they'll actually get into the board and start making decisions that influence where the company is headed in the future. There are a lot of well-known investors that actually do this, and it's seen as something that can kind of be a brute force method of trying to influence short-term decisions that drive up the stock price so these investors can then sell out and take a gain. But oftentimes when they do sell out, they'll actually leave the board and it'll leave the company in a little bit of a tough spot. An activist investor, typically a specialized hedge fund, buys a significant minority stake in a publicly traded company in order to change how it is run. An activist investor's goals may be as modest as advising company management or as ambitious as forcing the sale of a company, divestitures, or restructuring, or even replacing the board of directors. Overall, I don't think that is the main driver for why they sold out of their position. I think it more likely has to do with them seeing better investments out there and moving money from a SoFi to something else, and it just happens to coincide with the fact that they also lost their board seat. And again, I don't think they were trying to get any sort of stranglehold on SoFi, especially when you look at the investment goals of the Qatar Investment Authority. They were established back in 2005 to help strengthen the country's economy by diversifying into new asset classes. And in total, the fund manages $475 billion. So really a $500 million investment is very small numbers in the grand scheme of things. I did want to throw this little snippet snippet in here from Wikipedia that the fund is looking to minimize risk for Qatar's reliance on energy prices by investing in international markets like the United States, Europe, and Asia Pacific. This is very interesting because it shows how important diversification is when it comes to your portfolio. And one thing that I think you could take away from this is looking at your portfolio and seeing where you could be overweight. If you're invested heavily in technology, especially let's say AI right now, is there a possibility to diversify into maybe consumer discretionary or other types of industries that are not going to be so reliant if something were to happen to that one sector? And this is something a lot of very large investors do, and you can even see it here from the Qatar Investment Authority. And you can see that diversification shown in some of their holdings. They have a consumer discretionary here with global business travel. They have an energy company, which is utilities and telecommunications. They have finance with Credit Suisse. They also have a few healthcare companies. A lot of these companies I don't really recognize other than Credit Suisse because these are global companies. They're not US based, but it's very interesting again to see how they diversify away from energy to reduce some of their risk. One of the concerns I've seen from investors is that QIA might actually know something that investors don't about SoFi's financials. And I don't think this is necessarily true because shortly after the sale, we saw CEO Anthony Notto purchase 30,000 shares of SoFi at an average price of $6.48, worth about $200,000. Personally, I don't put a whole lot of stock into buys or sells from hedge funds, CEOs, anyone like that. I think it's important to make sure you are making your own investment decisions, but you can take away little snippets from some of these investments, right? Qatar is doing a very good job of diversifying what they are actually getting income from. They have natural gas, they have oil. This is great. However, they are also building out an investment firm that can bring in cash and revenue into the future. Anthony Notto, you can take a look at some of the buys that he has made into SoFi and see the prices that he has targeted and see if those are good prices where you feel comfortable. And right now, I think this is a little bit more of a strategic buy from Anthony Notto, where he's bought in with a little bit of money to kind of show that he still has confidence in where SoFi is headed in the future. But it is not a big buy like we have seen when SoFi has dropped into the $5 range. So don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do you call a monster with a high IQ? Check the comments down below for the answer. Thanks for watching.